Michael. Nice to see you again. The last time we chatted, we said
Sorry.
that we were going to revisit our conversation about real-time payments, especially as it relates to fraud experiences in the UK and how we might learn from that as we roll out faster payments here in the US and elsewhere around the world. So thanks for making the time.
No, it's a pleasure.
Okay, so recent news, but not so recent news. The UK regulator said, yes, in fact, banks are going to be required to reimburse consumers for push payment fraud, where the money goes into a fraudster's bank account. They provided some clarity with respect to how that reimbursement will be shared by the sender bank, the receiver bank, the intended receiver bank, which they say creates incentives for banks to actually avoid having the problem in the first place. So I want to get your reactions to what is recent news, and then a little bit more about how banks need to protect themselves from actually having the incidences in the first place.
Yeah, sure. As we discussed in previous conversations, authorized push payment fraud is a big issue in the UK. It's getting bigger, although the numbers have come down slightly after the implementation of confirmation of payee. So that is a system in the UK where the account holder is identified whilst you're making the payment. So it's basically, it matches the account name with the account number. That has had some benefits, but I think there's also recognition that that's not solving the problem because it's only gone down slightly and more is required. Now, the politicians in the UK have picked up this topic last year and announced that they will introduce new liability rules and that effectively obliges the bank to reimburse customers for fraud that they have incurred. Whilst many banks are doing that already today, this provides a very clear sort of legal basis and guidance on the obligations of the banks when it comes to reimbursing customers for fraud. So what's effectively happening is that the sending and the receiving bank of a fraudulent transaction will have to share the responsibility and the liability for the damage incurred. And that means both of them are on the hook for half of the damage. That's new. And what's come out today from the payment services regulator, the PSR in the UK, is more of a timeline for this, for the ratification of that law. But also, I think they're providing a bit more clarity on the mechanics of it. And whilst it sounds like a very simple and straightforward solution to a problem, I think there are many in the industry who don't really agree with that.
Right.
So there's all sorts of details that need to be worked out.
So what is it that needs to be done for banks to protect themselves and their account holders from these fraudulent payments? I mean, if in fact the confirmation of payee has only made a bit of a difference, a slight difference, but not enough to be material, what else is required?
So just maybe by way of background and as a reminder of what we're talking about here, it is basically situations where the payer is basically tricked into making a payment that they actually don't want to make. And that can be by way of changing the account number on an invoice. That in the UK there's a lot of talk about romance scams. So people are sort of emotionally tricked into making a payment to someone. That's what we call authorized push payment fraud, because these payments are effectively and completely authorized, and the payer wants to make the payment in the minute they actually make the payment. So that is hard to tackle with any kind of front-end system because these payments are due to fully authorized. We believe that in order to identify those fraudulent payments, you have to look at the beneficiary account. So you have to look at what the money is going to. Again, confirmation of payee has gone a long way to basically at least make sure that the account name and the account numbers match, which solved part of the problem. But there's still a significant number of fraud cases that are still happening, where indeed the number and the account are correct, but still the payer didn't want to make the payment. And
is it that they didn't want to make the payment, or
well, they did want to make the payment.
They did want to make the payment, but it was to a fraudulent, person or business as a part of a proposition to either get money or to buy something, or to take advantage of a service that obviously was a fraudulent proposition.
That's correct. And, the banks are very keen to point out that the source of the fraud is typically not in the banking system, right? So it happens in marketplaces, it happens in the real world, where, you're tricked into doing something that you otherwise wouldn't want to do. Unfortunately, and that's why this is such an important topic, the fraudsters typically target the weakest member of society, the elderly. And people who may not have second thoughts when they approached by someone and asked to transfer some money. So we believe it's not only an important topic because there's economic damage here, but there's also social damage here. And there are all sorts of stories of people who don't trust anyone anymore. Even if you reimburse them, it's a difficult process to get through today. So some of what's coming in terms of the liability rules will help those cases, because it will be easier to get your money back, but it just doesn't stop fraud. And I think that's at the heart of the issue here.
I mean, it is about social engineering. I recall this was several years ago, my father asking whether it was okay to take $5,000 out of his account because someone told him that if he delivered a check to them, they were going to meet him in a parking lot at a grocery store. They would give him a check for $7,500 for a refund he was owed. And I said, that's a scam. But it is convincing, and it does prey on the elderly, but it's social engineering, right? So how do you create a consumer responsibility for the liability? Because the banks can only do so much, right? Or eliminate the ability to send money fast.
Well, that's another debate. So, any kind of fraud check, may introduce friction in the system. So, and that's potentially a problem for real-time payments. We believe there are technical ways in which we can at least reduce fraud numbers further and make it harder. So we're introducing artificial intelligence as part of the payment processing that scans community data. So data that we have, because we're processing on behalf of a number of different banks, to identify what in the UK we call money mule services. So that there's one thing that these accounts have in common, and that is that amounts are paid on pretty quickly. So, they go into one account to the next account to the next account until their origin can't be traced anymore. So there are ways in which you can actually identify these patterns in payment data sets, and therefore assign risk scores to beneficiary accounts in flight, which basically means you make the payment, we scan the beneficiary account, assign a risk score, and report back to the bank that this might be a fraudulent payment, and they can then decide whether they approach the payer or whether they have more information, let the payment go through, stop the payment, or whatever they want to do with it. So is that going to solve authorized push payment fraud? No. Is it going to be another tool in the armory of the banks to bring it down and control it a lot more? Absolutely. That together with other measures like confirmation of payee, like very diligent know your customer processes when it comes to account openings. These fraudulent accounts, they must have been opened somewhere.
Sure.
following bank rules. So, a number of different measures need to be introduced to basically keep this under control.
I mean, it is a big problem. 41% of all fraud in the UK was a result of, push payment fraud in some form or another. Although I think the invoice scams are decreasing, at least according to the report that I read from 2022 experiences, because I think businesses are now more focused on these kinds of things and are not necessarily as maybe willing to fall for some of these scams as a person who may think of something as too good to be true and therefore want to move forward with a transaction. But how I mean, the banks obviously have an incentive to now address this more fully. So what is the roadmap for banks now?
So banks, we had quite a few of those banks at a roundtable a few weeks ago, and we discussed exactly that. And I think there is recognition now that banks need to work together to solve this. First of all, it's a shared liability, right? So it doesn't really help you just to have your defenses all in order. You need to, look at the counterparty as well, and you need to share data. So I think at the end of the day, it's all about data, and you need to have those data sharing agreements. You need to have the technology to scan the data, and you need to have the technical defenses to make sure that you identify as many of those fraud attempts. So there's a technical upgrade exercise, I think, required to ensure that we're keeping push payment fraud down. Now, is the liability change really going to make a whole difference in terms of those roadmaps? It might be sort of a catalyst event for some, but the reality is that banks have been working on eliminating push payment fraud for years, right? It's a big issue. It's a cost. It's always negative publicity bank when this comes out. So it's not entirely new. It may be an additional incentive because it becomes more expensive for banks moving forward, but it's not going to change the picture fundamentally. What it could do, though, is it may lead to more fraud because the fraudsters now know that the victims are actually insured.
Well, that's what I was thinking too. I mean, it's an unpopular topic of conversation, but there is a moral hazard here where both the fraudsters now recognize that there's a whole new ocean to sort of swim in, and consumers may not be quite as careful, right? If they know that they're always going to be protected. I mean, I do think that the consumer has a responsibility, that the payer, the sender, has a responsibility to know what it is they're doing and to whom they're sending the money, and to be sure that that is in fact something they want to do and are prepared to accept the consequences if it goes wrong.
Well, I guess it would not necessarily be fair to push this back to the consumer. And when you make a payment, you don't really expect to be scammed. And, I don't think we can really, accuse the consumer of not being as careful as they should be. And I don't think it's going to change that a lot. But as you said, the moral hazard of defrauding an elderly person, that's coming down because, they will be reimbursed. There's also talk about, and I haven't seen any evidence of that, but, higher numbers of what you could call friendly fraud, right? Where
first-party fraud,
exploiting the system by collaborating with someone else. So again, this is all difficult territory. Also, the whole topic of gross negligence. What if you tell a consumer that you're suspecting fraud, and the consumer insists that you pay out the money anyway? Because we've seen that in Roman scams, for instance. The scams, they trust the other person actually more than their bank. And all of a sudden you're creating a whole range of different issues. So it's not an easy topic. It's not going to go away. And Form 3, we strongly believe that technology can be very helpful. And it's the ultimate sort of defense if you can actually identify fraudulent activity in data sets that you have and run artificial intelligence algorithms on top of that to basically identify those. That's how the card companies have sort of controlled fraud, and I think there's some lessons to be learned there. But I think the industry is not really there yet, and there's a lot more to be done.
I mean, it's tough because you don't want to stand in the way of legitimate transactions, particularly where it's important for the sender to send money to the receiver immediately, and you don't want those, those kinds of transactions to be interrupted. But it's also the behavior of the fraudsters. They're very clever, and they probably, don't stick with the same kind of scheme or account long enough for there to be lots of ways to identify and shut them down. I mean, I think they're probably smarter than that.
Yes, and one could argue that with tools like ChatGPT and similar technologies, it's become a lot easier for fraudsters to be actually very efficient. For them, it's a scale game, right?
Right.
So you can be very targeted and very efficient when it comes to producing material that supports a scam when using artificial intelligence. So it will be really interesting to see how things like ChatGPT will actually impact the fraud scene.
But what about introducing a little more friction to consumers when they're sending money using instant rails where it is irrevocable, and to just question? I mean, that happens now when you're sending money. Are you sure you want to send this to that person? Do you know this person?
Yeah.
And it does cause you to kind of question or reaffirm or check the amount, or at least you go through a process where you check the boxes mentally before the money goes. I mean, what about requiring some of those things where the speed of the transaction is instant, but the deliberation before you send it, does require a little bit more thought?
Yeah, and that's happening, right? When you go on your electronic banking app or a mobile app or whatever you're using, you set up a new beneficiary. At least in the UK, many banks would then ask you, do you know this person? What's the purpose of this payment? Could it be possible that the invoice, if you click invoice payment, that this could have been tampered with? So I think there are things that banks are doing to make the consumer think twice. And that's good, right? And is it really friction? Yes, it takes a bit longer to get the payment done. But I mean, in real time, it's a few more clicks that you go through. And if it prevents fraud, it's very hard to measure how much fraud is really prevented by that, because it doesn't happen then, right? But I think this is, again, another tool in the armory of the banks to basically make sure that they keep those fraud numbers under control.
I think if we can isolate the situations where these sort of social engineering scams are prevalent, you can do more to encourage consumers to think twice about it. I mean, as banks deploy the kinds of technologies, AI and data sharing that help fortify the defenses, when you can start to isolate patterns of these kinds of scams and alert consumers, I do think that can help too.
Yes, and the banks, I think, quite rightly suggest that other parts of the ecosystem need to be involved in this as well, and that is again the online platforms where a lot of the fraud is initiated. That is law enforcement, where they need to provide data on patterns and latest waves and whatever. So it's a very big topic, and although this is now landed on the doorsteps of the bank, because that's ultimately where the money flows, there's a lot more happening in society that ultimately leads to the fraud, and there are many different ways in which this can be addressed. But again, it isn't an important topic, and one that I'm really passionate about, because it has an impact on people's mental health. It has an impact on people's trust in the authorities, people's trust in the banks, and I think there's so much going on here. And whenever you talk to people, everybody, like your dad, everybody knows someone who has been defrauded, and everybody knows that is a very painful exercise. So we're very committed to making sure that we do our bit on the processing side to ensure that we keep those fraud numbers down.
Hey, one thought, what about the liability of a marketplace or a third party that brought the fraudster to the individual who's pushed the money to that person? Do they have any liability, or can banks go to those sources to capture any reimbursement for what they've had to reimburse the customer for?
To my knowledge, at least not based on the legislation that we talked about earlier. So that is really focusing on the bank's ecosystem. There might be other legal ways in which banks can try to, get reimbursed, but the reality is it's very hard to prove. It's very hard to make the case that those platforms are actually responsible. It happens on the platform, but it's not sort of done by the platform, if that makes sense. And some platforms are better than others when it comes to
KYC.
Exactly, the KYC, so identification of the users. But I have not heard that banks have actually pursued any of the platforms to get reimbursed.
I mean, it would be interesting because, when you go back to the source, I mean, the fraudster has to operate somewhere. And it would seem like a market. I mean, I know that they do their own KYC as well, but it seems like there's shared responsibility there as well.
As I said, it requires the involvement of different parts of the ecosystem. And again, I don't want to give the impression that nothing is happening in that respect. So, the industry bodies are working on it. This is a well-recognized problem. It's an expensive problem as well. Unfortunately, it will also, in my view, potentially have an implication on innovation in payments, in particular smaller companies. So smaller payment service providers might not be able to cover these liabilities with the financial resources that they have. So it's a barrier to entry for any payments. Another unintended consequence is a barrier to entry for payment service providers, because it is expensive. So you have to have the financial resources to actually do this.
Yeah, and I think we also didn't talk about the real value of pushing payments in real time to a beneficiary. In the paycheck to paycheck world in which many people live, being able to get money for whatever reason, whether that's to secure a product that is required or a service that's required, or just paying someone for services that were supposedly delivered but diverted to a fraudster. I mean, all of these things are important in moving money quickly between parties.
Yeah, I would. Although again, I'm passionate about the fraud topic, but if you take a step back, I would not go as far as sort of questioning the relevance of real-time payment systems, right? So I think real-time payments, the ability to move money fast, has very positive implications for society, and so I think if there is a way to move money fast and cheap between different parties, be it between individuals or companies or whatever, then that in essence is a good thing, right? It unlocks a lot of business models. Think gig economy, others. You get your money faster. It works on weekends. So it's very often overlooked, but ACH and high value payment systems today don't work on weekends.
Yep.
These systems are always on. So you can pay your mate in the middle of the night for sharing a meal or something, and the money will arrive in the account, and it's final. There's benefit in that, so I think, like with any innovation, the massive benefits on the one hand, but risks and downsides on the other side. So it's all about finding the right balance. But we do believe that the right balance can be found if technology is used in the right way. Again, confirmation of payee, the kind of measures that we talked about at the payment initiation level, but also the processing and the scanning of beneficiary account details and everything. So I think if this all comes together, I think we can have both, the efficiency of a frictionless real-time payment system on the one hand, and the safe way for customers to move money between entities on the other.
Michael, thanks so much for your insights today. I'm sure we'll be talking about it many more times as everyone tries to get their arms around this and do what's best for the consumer, and obviously the financial institutions behind that consumer. Thank you.
Thank you.